Listen to Financial Call-In Show, brought to you by Certified Financial Group in Altamont Springs. It's the only show hosted exclusively by certified financial planner professionals. Monday through Friday, their CFPs provide
Good morning and welcome to On the Money right here on WDBO 107.3 FM AM 580, always streaming live in your very own WDBO app. My name is Josh McCarthy, joined with the team at the Certified Financial Group office here in Central Florida. By now you know what this show is. You listen to Joe and Gary, a couple of guys from the Certified Financial Group, a couple of certified financial planners, and Joe's team joins us every Saturday morning to answer your financial questions. They'll break down the news stories, break down the trends. If you've heard something from a friend who heard it from a friend who, something about running around. I forget how that song goes, but if you know how it goes, and you want to just say, hey, is this too good to be true? Well, that's what Joe and Gary do for you on this very day. If you guys want to join, the number to call is 844-580-9326. Speak with one of the top 100 financial firms in the country. And how exactly does that happen, Joe? How do you guys get that top 100 qualification?
Well, we don't know how that happened, frankly, because they won't tell you with the analysis they do. But we assume it's a combination of things. And number one, that we have 16 certified financial planners here with the firm, that we've been around for 40 plus years. We manage a couple $1 billion in assets. We are CFEX certified, which is a distinction held by fewer than 1% of investment advisory firms in the country. And we're on the radio. Maybe that helps too. So whatever the algorithm was that they used, we were honored to be chosen, and we're glad to be here. But anyway, as you said, we are here for our listeners, live for you this morning to answer your questions, things that might be on your mind regarding your personal finances, things that you may have heard, things you may have misunderstood, decisions that you're trying to make regarding your IRA, 401k, long-term health care, annuities, life insurance, reverse mortgages, all that and more, the things that Gary and I and the 14 other certified financial planners deal with day in and day out with our clients, providing financial planning and investment management for a fee Monday through Friday. But on Saturday morning, we're here for you absolutely free. So if anything's on your mind about those things, and we have in the studio here this morning with me Gary Abely, who is a certified financial planner, in addition to being a CPA. And Gary, runs these workshops on Medicare planning. Right?
Yep, Medicare.
Yeah. And they are sellouts because there's such a confusing area, particularly right now with Medicare enrollment going on.
We hear these commercials.
We hear the commercials ad nauseum with Martha. And
oh, gosh.
And, we'd be glad to take any calls about that because there's a lot of confusion and misunderstanding about what Medicare does, what Medicare doesn't do, the advantages and disadvantages of Medicare Advantage,
right,
and all that stuff. So we're here this morning for you. The good news for you, if you have any questions about anything personal finance, we are here to take your calls, and the lines are absolutely wide open. And those numbers are.
That's right. The numbers to call in are 844-580-9326, 844-580-WDBO, or you can text that very same number, 844-580-9326. It may be the best practice just to save that number into your phone for WDBO. That way you can just text it or call it whenever you have a question for the Certified Financial Group. Or you can send in your open mic if you want to hear your voice on the air. Download the free WDBO app, push the open mic button down at the bottom, and send us your best 10 to 15 seconds, and I'll pass it along to the people who actually know the answer, like Joe and Gary today with the Certified Financial Group. Today's topic, until we get things rolling, is what are buffered ETFs? Who are they right for, and what are the pros and cons?
First of all, what's an ETF?
So an ETF, Joe, is an exchange-traded fund. So think about a mutual fund, but trades on the New York Stock Exchange between 9:30 and 4 o'clock. So with a mutual fund, when you want to sell it, you sell it at the end-of-day price. About a half an hour into the end of the day, they calculate what the net asset value is for that particular mutual fund. But with an exchange-traded fund, you can only sell it while the market is trading, right? So
like a stock.
Just like a stock, sometime between 9:30 and 4 o'clock. And there are tax advantages to exchange-traded funds versus mutual funds in the form of capital gains distributions that are taxable and can result in quite a big tax for a mutual fund. So for our listeners, this is the time of year where you typically want to be very careful buying a mutual fund, because you could get assessed capital gains distributions even if you've lost money. Let's say you buy a fund, for example, today, and you get to 12/31, the end of the year, and you've lost 10%. Let's hope that doesn't happen, but let's say it does.
But it has happened.
It has happened, sure.
Yep.
Well, you may be surprised to get a 1099 form at the end of the year for a taxable account. We're not talking about IRAs here. And you may be assessed as much as 20% gain. Sometimes more if it's a crazy year where there's a lot of volatility and there's a lot of trading in that fund.
Now, let's explain why that happens.
Well, the mutual fund is buying and selling securities, and it's going to allocate the gains or losses, but gains in this case that we're talking, to the shareholders based upon their ownership percentage.
So all year long, let's say in January, let's just hypothetically, in January we're starting out, and the mutual funds owns a bunch of stocks, which is going to sell perhaps sometime during the year,
right?
Generates capital gains. Those capital gains are then reinvested,
right,
to buy more shares.
Yep.
However, those capital gains also impact the share price.
They do. And so, again, the end of the year, you're going to get a 1099 form, and it's going to say, you own this percentage of the company, and therefore this is your percentage of those capital gains, whether you earn them or not.
Right.
So that's the trick. But getting back to a buffered ETF, this is a unique product, and it's relatively new. I think last 5 to 7 years the products have come out, but they're becoming more popular now. The press is starting to pick it up. So we wanted to talk about these. They sound very attractive, and they can be for people, right? It all depends on somebody's risk tolerance and their comfort level. And they take the form similar to this. You could pick an index. Let's just take the S&P 500 index. It's
most common. Yep.
Most common, broad index. And it would give you a scenario like this. You could make up to 15% on the upside. But if the market goes above 15%, you don't participate beyond 15%.
So I'm limited to a 15% gain even if the market does 30.
Exactly. And because you're giving up that gain, you get something in return.
What do I get?
You get some protection if the market goes down. And oftentimes 15 for 15, right? So 15% upside and 15% downside protection. Now, who this appeals to, I think, are people who are conservative, people who are moderately conservative, who want protection on the downside, but they want to participate on the upside, but they're willing to give up the crazy upsides for some protection on the downside.
So who is it not good for?
Well, I think potentially you could say long-term investors that are aggressive and want to participate in the most possible market return. So here's kind of an interesting stat. If we go back 95 years, the market has gone up in value. The Standard & Poor's 500 index has exceeded a 20% return 36 of those 95 years. So more than 1 in 3.
Not bad.
All right. Now, on the downside, the market has gone down more than a negative 20% in those same years, only 6 times. So we've got 36 times where it's gone above 20%, 6 times where it's gone below minus 20%.
Got it.
So if you're aggressive, maybe moderately aggressive, you say to yourself, well, I don't want to give up that upside. About 1 in 3 years, the market goes above, right? In other words, I'm going to be capped out on this buffered ETF. I'm not going to participate in gains above 15%. But there's one other investor this might make sense for.
Tell me.
It could be any risk profile where somebody says to us, because we get this all the time, Joe, I'm really concerned about this war in Israel expanding into Saudi Arabia, into Iran, and us getting involved. And I just want to sit out. Just put me in a CD and, let me sleep better. Well, for somebody like that, we know you can't time the market.
We know that for sure.
I think we all agree that the current war has the potential to expand. But we also know plenty of war times where the market's done very well.
That's for sure.
Okay. So if you've got somebody that said, I'm going to, put my money in a mattress, and you give them an alternative to have some downside protection and still offer some upside, that could be very appealing to somebody. Now, I would say that is somewhat maybe a form of timing, but the reason it can be successful for somebody, again, is if their alternative is to go into safety, this still allows them to participate, again, in some of the upside, given they'll have that downside protection.
Right.
And, we just mentioned the S&P 500. They also have this on the NASDAQ. They have this on the Dow. There's multiple different products. Some of them allow you more upside and less downside. You might have maybe a 20% upside for the NASDAQ with only a 10% protection on the downside. But ultimately, we know we want to be long-term investors, and we don't want to miss out on those 1 in 3 years. Now, that's history, right? Past performance does not mean this is what's going to happen in the future. But we don't want to, if we're a long-term investor, we don't want to try to be picking the years that we're going to go up or down, right? That's foolish.
So the suggestion might be is that if you're going to consider that, you wouldn't want to bet the ranch on that, perhaps a portion of your portfolio.
That's exactly right.
You got it. And I see we're up against the break there, Josh, so take it away, buddy.
That's right. If you want to call, the number is 844-580-9326. Pick the brains of these certified financial planners, Joe Bert and Gary Abely with the Certified Financial Group. 844-580-WDBO is the number if you want to call in or text in a question. I'll read that for you guys live on the air. Or you can send in your open mic and I'll play it for you. Be a part of the radio show. Hear your voice live on the air. You're listening to On the Money, where we're planning tomorrow.
Today.
With the Certified Financial Group.
40 years ago, I had a dream of building the best personal financial consulting firm in Central Florida. Now, with 14 certified financial planners acting as fiduciaries, I believe we're there. But don't take my word for it.
As we approach retirement, we have the freedom of choice.
Peace of mind that we now have, that's everything to us.
The people that work here are honest and caring, and I feel like I can go to sleep at night.
So schedule your no-obligation visit today at financialgroup.com, or we're planning tomorrow, today. Did you know anyone can call themselves a fiduciary, but only certified financial planners are required to work in your best interest? And we have 14 of them right here in Altamont Springs. So when you're ready to plan for your retirement, give us a call.
Just knowing that my money's here with Certified Financial Group, I feel relaxed and comfortable.
They're smart, they watch the market, they take care of you, you can depend on them.
So schedule your no-obligation visit today at financialgroup.com, where we're planning tomorrow, today.
What is a fiduciary? When it comes to investing, a fiduciary is legally required to act in your best interest. For 40 years, planners at Certified Financial Group have been guiding our local clients toward financial peace of mind. The rest of the world is still catching up, but our team of certified financial planners are the local, experienced fiduciaries you can trust. Certified Financial Group are your Central Florida planners. Call us today. Your Confident Forever plan is possible with a CFP professional. At Certified Financial Group, we can help you build a complete financial plan. Visit financialgroup.com to find your CFP professional.
Years ago, I had a dream of building the best personal financial consulting firm in Central Florida. Now, with 14 certified financial planners acting as fiduciaries, I believe we're there. But don't take my word for it.
As we approach retirement, we have the freedom of choice.
Peace of mind that we now have. That's everything to us.
The people that work here are honest and caring, and I feel like I can go to sleep at night.
So schedule your no-obligation visit today at financialgroup.com, or we're planning tomorrow, today. Did you know anyone can call themselves a fiduciary, but only certified financial planners are required to work in your best interest? And we have 14 of them right here in Altamont Springs. So when you're ready to plan for your retirement, give us a call.
Just knowing that my money's here with Certified Financial Group, I feel relaxed and comfortable.
They're smart. They watch the market. They take care of you. You can depend on them.
So schedule your no-obligation visit today at financialgroup.com, or we're planning tomorrow, today.
What is a fiduciary? When it comes to investing, a fiduciary is legally required to act in your best interest. For 40 years, planners at Certified Financial Group have been guiding our local clients toward financial peace of mind. The rest of the world is still catching up, but our team of certified financial planners are the local, experienced fiduciaries you can trust. Certified Financial Group are your Central Florida planners. Call us today. Your Confident Forever plan is possible with a CFP professional. At Certified Financial Group
app, if you want to join the conversation, we got Gary Abely and Joe Bert, a couple of certified financial planners with the Certified Financial Group with an office here in Central Florida. The number to call in or text in your question is 844-580-9326, 844-580 WDBO, or you can send in your open mic using that free WDBO app. Joe, you want to go to the call here?
Let's not keep him waiting.
Sure, we got Keith calling in from Lake County. He's got a question that we all want to know. Hopefully we get there one day. Should I pay off my house? Go ahead, Keith.
Good morning, Keith. Thanks for calling. How can we help you?
Morning, guys.
Good morning.
Well, I've got a question that is going to be more of an opinion, I think. I retired early, and when I did, I paid off one house and bought another one. And when I paid off the other house, I had quite a bit of equity, and so I put that into the market. And my thought was, since I've got the new house on an adjustable rate mortgage, an ARM, that when the price started to skyrocket, that I would just take those funds and pay off that. But I've had it in the market, and it's done quite well for me. It's actually done better than if I would have paid off this house to begin with. And my question is, since it's adjustable and things look like they're going up, your opinion, would it be better to pay it off? I've got $250,000 roughly to pay off this current house.
What's the interest rate?
Currently, since it's an ARM, it's currently at 6%. It's going to be readjusted next March, I believe.
Mm-hmm. All right, Keith, is there a cap on how high that can go?
I don't believe there is.
Oh.
Usually there is. Yeah. So, the first thing I would do is pull that out, and because obviously it's gone up, I believe, since you've taken it out, correct?
Yes.
All right. So oftentimes there is a cap, and I would want to know just, what that is to advise you. And then the other big question, I think, Joe and I are both thinking the same thing here, is what is your risk tolerance? Because we know that the difference between the high point and the low point in any year is very common to be, 30, 40%. That's not uncommon at all. And so I would ask you, Keith, if the market had a typical bear market decline, which we get on average a little bit over every 5 years of 34% decline, what would you do? Would you sit it out and recognize that it was a temporary decline? Or would you cry uncle and say, get me the heck out of here, and I wish to heck I hadn't ever done this? So what kind of investor are you?
I have a high tolerance for risk.
All right.
I do realize that, yes, things will recover, and it's temporary.
Okay.
Such as last year.
Right.
Right.
And that leads me to believe that what you did it will likely work for you over the long term. I would want to know what the cap was, just to, if it's uncapped, I think we're starting to see mortgage rates actually come down a little bit,
yep.
right?
10 years down.
Yeah. So I'm going to say that the worst is likely over. Maybe you have another 0.5% to go. Well, you've got this readjustment period, so you could contact and find out what that adjustment will be. But I would say your strategy is not a bad one.
Yep, I agree with you 100%, particularly in light of what your risk tolerance is. And the key to making money long term is not being forced to sell when things are down.
Exactly.
And that's where people lose money. So if you've got the ability to ride the markets as they always do, you're going to do fine. Appreciate the call, Keith. I see we're up against the break, so take it away, Josh.
Thank you so much, Keith. If you want to get the next question live on the air, the number to call is 844-580-9326, 844-580-WDBO. Texting your question to that same number, 844-580-9326. We'll have a couple of them just rolled in, so we'll be addressing those after this here break, or you can send in your open mic using the free WDBO app. You're listening to On the Money, where we're planning tomorrow
today
with the Certified Financial Group.
We can help you build a complete financial plan. Visit financialgroup.com to find your CFP professional.
Years ago, I had a dream of building the best personal financial consulting firm in Central Florida. Now, with 14 certified financial planners acting as fiduciaries, I believe we're there. But don't take my word for it.
As we approach retirement, we have the freedom of choice.
Peace of mind that we now have. That's everything to us.
The people that work here are honest and caring, and I feel like I can go to sleep at night.
So schedule your no-obligation visit today at financialgroup.com, where we're planning tomorrow, today. anyone can call themselves a fiduciary, but only certified financial planners are required to work in your best interest. And we have 14 of them right here in Altamont Springs. So when you're ready to plan for your retirement, give us a call.
Just knowing that my money's here with Certified Financial Group, I feel relaxed and comfortable.
They're smart. They watch the market. They take care of you. You can depend on them.
So schedule your no-obligation visit today at financialgroup.com, where we're planning tomorrow, today.
What is a fiduciary? When it comes to investing, a fiduciary is legally required to act in your best interest. For 40 years, planners at Certified Financial Group have been guiding our local clients toward financial peace of mind. The rest of the world is still catching up, but our team of certified financial planners are the local, experienced fiduciaries you can trust. Certified Financial Group are your Central Florida planners. Call us today. Your Confident Forever plan is possible with a CFP professional. At Certified Financial Group, we can help you build a complete financial plan. Visit financialgroup.com to find your CFP professional.
Years ago, I had a dream of building the best personal financial consulting firm in Central Florida. Now, with 14 certified financial planners acting as fiduciaries, I believe we're there. But don't take my word for it.
As we approach retirement, we have the freedom of choice.
Peace of mind that we now have. That's everything to us.
The people that work here are honest and caring, and I feel like I can go to sleep at night.
So schedule your no-obligation visit today at financialgroup.com, where we're planning tomorrow, today. Did you know anyone can call themselves a fiduciary, but only certified financial planners are required to work in your best interest? And we have 14 of them right here in Altamont Springs. So when you're ready to plan for your retirement, give us a call.
Just knowing that my money's here with Certified Financial Group, I feel relaxed and comfortable.
They're smart. They watch the market. They take care of you. You can depend on them.
So schedule your no-obligation visit today at financialgroup.com, where we're planning tomorrow, today.
What is a fiduciary? When it comes to investing, a fiduciary is legally required to act in your best interest. For 40 years, planners at Certified Financial Group have been guiding our local clients toward financial peace of mind. The rest of the world is still catching up, but our team of certified financial planners are the local, experienced fiduciaries you can trust. Certified Financial Group are your Central Florida planners. Call us today. Your Confident Forever plan is possible with a CFP professional. At Certified Financial Group, we can help you build a complete financial plan. Visit financialgroup.com to find your CFP professional.
Years ago, I had a dream of building the best personal financial consulting firm in Central Florida. Now, with 14 certified financial planners acting as fiduciaries, I believe we're there. But don't take my word for it.
As we approach retirement, we have the freedom of choice.
peace of mind that we now have. That's everything to us.
The people that work here are honest and caring, and I feel like I can go to sleep at night.
So schedule your no obligation visit today at financialgroup.com, or we're planning tomorrow, today.
So much, Billy P. This, of course, as he said, is On the Money, a place for you to get your financial questions answered live on the air. Today we have Joe Bert and Gary Abely, a couple of certified financial planners, standing by taking your questions live on the air. If you want to call in or text in your question, the number is 844-580-9326. That's 844-580 WDBO, or you can send in your open mic using that free WDBO app. The lines are wide open, so call in right now. Text in your question, 844-580 WDBO, or if your question is more of the sensitive nature, we do have Rodney Ownby standing by off the
Actually,
air.
we've got Wynn Smith today.
Well, apologies. We have Wynn Smith, equally as qualified as Rodney Ownby, standing by. But Wynn will take your call. That number is 407-869-9800, 407-869-9800. Joe, Gary, what do you say we go back to these text questions?
Let's do it.
And dive right in. This one comes to us from a couple of, invested parents, from AG and Christine in Orlando. AG is asking, which one should I choose for teenage children, life insurance or Roth IRA? And a very similar question comes to us from Christine in Orlando. She wants to know, can my 19-year-old son, who works part-time about 20 hours a week, start contributing to a traditional or Roth IRA? I know he can't do a 401k, but they did open him up an investment account with Fidelity.
Well, both of those are great questions. Let's talk about life insurance versus investing for a teenager.
Well,
You
hands down,
You have teenagers, and I have had teenagers.
No,
yours are beyond teenagers.
Mine are beyond now.
Okay, so you've been there, done
But
that.
actually, we did start Roth IRAs for them when they were working, and if we, it'll be kind of a fun exercise if we just go through this. So let's take a teenager, and let's say they had a job and they earned $5,000. Now, maybe that teenager wants to spend that $5,000 on a new car, but you know what Grandma and Grandpa can do? They can actually fund a Roth IRA as a reward for that work if they want to. And so let's take a $5,000 funding, and let's say somebody is 15 years old as an argument.
Okay.
Now, we know, go back 95 years, the market, the S&P 500 index has averaged 10%, but I tell clients expect more like 7.2% going forward, because that's about what we're seeing in positive free cash flow of late.
Okay, and a 7% compounding over 10 years
so
does
you
what?
know where I was doing.
Exactly.
I made the math easy for myself.
We've been in the business too long.
So the rule of 72, you take 72, you divide it by that growth rate, and that equals the number of years to double your money. So we'll take 72, and we'll take it divided by 7.2, and by gosh, we double our money every 10 years.
Right.
So that 15-year-old, how much will they have at age 65? So I'm going to use my fingers, and because the money's going to double every 10 years, right? We've got 5 doublings, right? So the 5 becomes 10, the 10 becomes 20, the 20 becomes 40, the 40 becomes 80, the 80 becomes 160,000. So you can do this in your head. So the grandparents can give what will become $160,000 tax-free if we do this in a Roth account. So that entire amount, the amount that you put in plus all the growth, will be tax-free in a Roth. Now, it would make no sense in this example to do a regular IRA.
Right.
And the reason is
the child pays no taxes.
That's right. The standard deduction would cause that child not to pay any income taxes, so only the Roth would make sense. Now, depending on how they're paid, let's say that they are, picking up dog poop or washing cars or mowing lawns, whatever they do. Well, that's self-employment income. So they will have to pay both halves of the payroll tax, which is around 15%, times that $5,000. So there will be some cost. And you do have to recognize the profit, right? It's the profit on that business venture. that allows you to put money in the Roth IRA.
Right.
Now, of course, if they got a W-2, it's just meaning earnings
They're working
from
at
an
Publix,
employer.
they'll get a W-2.
Right. Then no problem. They can still do the Roth.
So that $5,000, based theoretically,
Yep.
grows to $160,000
over a 50-year period.
That's
Yep.
a 32 times return on your dollar.
Yep.
So you put in $1 today, it's worth 32 times more
Yep.
for that grandchild. Now, purchasing power of that, who knows what it'll be, but it'll be certainly more than doing nothing.
Well, absolutely. And just think about if you started this at age 10
Oh.
and you did this through age, through college, for
Yes.
example. You could actually fully fund somebody's retirement if you did this early in life enough and you did it for about a 10-year period and you maxed out.
There you go.
So that is what is true wealth accumulation.
Oh, it's the power of compounding. The eighth
It
wonder
is,
of the world.
exactly.
And unfortunately, they don't teach you the stuff in school. You don't realize it until you're 55 years old and look back at all those missed years. And this is why we have folks coming to see us right now and say, gee, I wish I'd have known this, but nobody told me about it. How can you help me? And this is what we do. And, we can help a lot of people get through this stuff. But the important thing is knowledge. Knowledge is critical. And once you have the knowledge, you are charged there or have the ability to change the direction of your life.
Exactly. But the life insurance I would not recommend.
Tell me why.
Well, it's so chances are somebody's being pitched a universal life, whole life type policy. It's life insurance with a investment feature to it. It can make sense to have a policy like that if you're doing estate planning. You have somebody that has a taxable estate, and you are going to hold this until death. But pure term insurance is, the cheapest way to go. And
But a teenager does not need life insurance.
No, they don't have any dependents.
In fact, when you combine insurance and investing in the same vehicle, you oftentimes get the worst of both worlds
That's
because
exactly-
you're
I was just gonna
overpaying for the
say.
insurance
Right.
and you're not getting
Yep.
underperformance on the investments.
Exactly.
If you got the Roth alternative, that is a far better way to accumulate wealth if that's what you're after.
Absolutely.
Don't confuse apples and oranges.
Yep.
So hopefully we answered that correctly for our text questioner there, Josh.
That's right, we sure did. If you want to leave your text question or call in, it's the same number, so you might as well just save this down into your phone under WDBO. The number to text or call the show is 844-580-9326, 844-580-WDBO, or you can send it an open mic using that free WDBO app. And gentlemen, we just had an open mic roll in on here on us. Would you like us to play that back now?
Let's do it.
Here we go.
Good morning. Annette from Winter Garden. Is there a financial advantage or disadvantage to choosing a Medigap policy as opposed to an Advantage policy? Thank you.
Aha. There we go. Right up your alley, Gary.
Well, great question, Annette. And, mostly what we see today on TV are the commercials for Advantage plans. And this is the open enrollment time for next year up until December 7th. And that's why we see these commercials again ad nauseum. So the big difference is when you do go on to an Advantage plan, these are also called all-in-one plans, Medicare Advantage, Part C Medicare. They have lots of different names.
I
for
like
the
the way
same
they
thing.
call it Part C Medicare. You know,
Right.
it can make it sound like it's by the government. You got A and B,
Exactly.
and now you've got C. And the best new thing about it, it's not going to cost you anything.
Right, exactly. Well, Part C Medicare, you're actually no longer part of original Medicare, Parts A and B.
So when you go to C, you give up A and B.
Yes, you give up A and B in place of a private insurance company paying your claims.
Or do you just give up B?
No, you give up A
and B.
A and
Okay,
B, yeah.
okay.
And so now you can always return, right? You're always able to go back to original Medicare. The issue, though, is if you are sick and you can't answer medical questions favorably, maybe you just had a recent hospital stay, then you can't go back to that Medigap policy without going through medical underwriting. You can always go back to Part A and B, and that's going to cover 80% of you. But I don't know about you, Joe, but there's 20% of what 20% of you don't you
Exactly.
want to cover, right? 'Cause
Exactly.
20% of a big bill is still a big bill.
So let's summarize this because you don't really start dealing with this until you're close to 65, and then your
Right.
mailbox explodes with all these
Exactly.
offers. So let's talk about what A, B, and C is, and what Medigap is, and where that all comes into play.
Yeah, so Part A, that was the first start to Medicare, and that covers hospitalization for the most part, right? So people were retiring and they were going bankrupt because they'd go into the hospital and have this huge bill, and you didn't have insurance for that, right? You were no longer working.
It doesn't cover the doctors.
Nope. So the doctor appointments and the outpatient came with Part B because all of a sudden we realized people get sick in the hospitals. We want to do outpatient surgery, right? So a lot of the care started going into outpatient facilities. So that's when Medicare Part B started coming.
So the government provides A and B.
They provide, well, you pay for B, keep in mind.
Well, that's correct.
Right? You're paying about $165.
But it's a government-run program.
It's a government-run program. Right. You're eligible for it when you're 65, as long as you've worked here.
Right.
And then, I think it was the Bush administration that came up with Part D. Don't quote me on that, but I think it was. Yep. Anyway, so we've got Part D is the prescription component, because we realize now that a lot of what our healthcare dollar is spent on are drugs. Mm-hmm. And so the Medicare Advantage plans often have a prescription component built into them, whereas Part D Medicare is something you would partner with A and B and a supplement. So you really have two options: Part A and B, plus a supplement,
D, plus a D,
plus D.
Plus B,
okay. That's one option, right? Or you would go with Part C Medicare, but you still have to pay, and a lot of people don't realize this. In order to get Part C, the Medicare Advantage, you still have to pay for Part B, even though technically your coverage isn't through original Medicare anymore. You still have to pay that premium, right? And again, this year it's around $165. So the main difference in cost is going to be your Part D prescription costs, which often run $20, $30 a month, and a supplement. And when you're first 65, those run, depending on whether you're smoking or not, somewhere around $200 a month. So, the free Advantage plans look really attractive. But keep in mind, they use a network, and you have to, some of them are an HMO type based plan. And if you go outside of that network, it's all your nickel.
Yeah, so we need to get back to that because most people don't realize that until it's too late.
That's right.
So I hear the bumper music. Josh, so take it away.
That's right. If you want to join the conversation, we have Joe Bert and Gary Abely with the Certified Financial Group taking your questions. You can either call or text in at 844-580-9326, 844-580-WDBO, or send in your open mic using that free WDBO app. You're listening to On the Money, where we're planning tomorrow.
Today.
With the Certified Financial Group.
Did you know anyone can call themselves a fiduciary, but only certified financial planners are required to work in your best interest? And we have 14 of them right here in Altamont Springs. So when you're ready to plan for retirement, give us a call.
Just knowing that my money's here with Certified Financial Group, I feel relaxed and comfortable.
They're smart. They watch the market. They take care of you. You can depend on them.
So schedule your no-obligation visit today at financialgroup.com, where we're planning tomorrow, today.
What is a fiduciary? When it comes to investing, a fiduciary is legally required to act in your best interest. For 40 years, planners at Certified Financial Group have been guiding our local clients toward financial peace of mind. The rest of the world is still catching up, but our team of certified financial planners are the local, experienced fiduciaries you can trust. Certified Financial Group are your Central Florida planners. Call us today.
Your Confident Forever plan is possible with a CFP professional. At Certified Financial Group, we can help you build a complete financial plan. Visit financialgroup.com to find your CFP professional.
40 years ago, I had a dream of building the best personal financial consulting firm in Central Florida. Now, with 14 certified financial planners acting as fiduciaries, I believe we're there. But don't take my word for it.
As we approach retirement, we have the freedom of choice.
Peace of mind that we now have. That's everything to us.
The people that work here are honest and caring, and I feel like I can go to sleep at night.
So schedule your no-obligation visit today at financialgroup.com, or we're planning tomorrow, today. Did you know anyone can call themselves a fiduciary, but only certified financial planners are required to work in your best interest? And we have 14 of them right here in Altamont Springs. So when you're ready to plan for your retirement, give us a call.
Just knowing that my money's here with Certified Financial Group, I feel relaxed and comfortable.
They're smart. They watch the market. They take care of you. You can depend on them.
So schedule your no-obligation visit today at financialgroup.com, or we're planning tomorrow, today.
What is a fiduciary? When it comes to investing, a fiduciary is legally required to act in your best interest. For 40 years, planners at Certified Financial Group have been guiding our local clients toward financial peace of mind. The rest of the world is still catching up, but our team of certified financial planners are the local, experienced fiduciaries you can trust. Certified Financial Group are your Central Florida planners. Call us today.
Your Confident Forever plan is possible with a CFP professional. At Certified Financial Group, we can help you build a complete financial plan. Visit financialgroup.com to find your CFP professional.
On the Money right here on WDBO 107.3 FM AM 580, always streaming live in your WDBO app. If you want to call the Certified Financial Group, we have Wynn Smith standing by off the air to answer your questions. That number is 407-869-9800, 407-869-9800. Gary, Joe, wrap up the show for us now. It's been a great one.
All right, so we had talked earlier about buffered ETFs, and Joe and I were talking and said, well, we really should talk about percentages that one would potentially allocate to a strategy like that. And we would suggest, no more than probably a range of somewhere between 20 to 30% on the upside for that particular strategy. Anytime you go to anybody and they say, this is for you, you should put all of your money in an annuity, or you should put all of your money in this buffered ETF, you really should probably, be careful of that, right? Not one product is not the solution for all of someone's needs. You need a
diversification is the key to success.
Yep. And this time of year, we also want to be mindful that this is a good time to look at all of the holdings in your portfolio and your brokerage account, meaning your non-retirement account, your non-qualified account, and look to see if there's any losses that you can harvest. Just remember, if you sell something, you can't buy that back for 30 days. Otherwise, that loss will be suspended. It's called a wash rule. But this could be a good time. There's certain sectors. The market has primarily been driven by 7 names this year, right? So if you're not in those, if you're not in those Magnificent 7 stocks, you're very likely to have some asset categories that are down in value. It may make sense to sell it, recognize the loss, and buy a similar but not the same fund, so that you're still in that same proportionate asset class.
All right. This is what we do for our clients right now in the fourth quarter of the year, looking at tax loss harvesting opportunities. So when you see transactions in your account, it's what we are doing. And when you see those transactions, once again, remember, that we're doing this for you. We don't get compensated by buying and selling your account because there's no commissions, no transaction fees. It's because it's the right thing to do. We're taking advantage of the tax code to lock in some losses to offset the gains. So what you want to do is make your gains tax-free, and this is the way you do it, by using some losses, doing tax loss harvesting. So it's not a set it and forget it. It's always managing that portfolio. We don't set it and forget it. We keep an eye on what's going on and try to walk through or work our way through this challenging times that we have right now.
Exactly.
So once again, Win Smith is in our office, and we have a workshop coming up. I know the next one is...
We've got a few of them, yeah. So we've got one explaining the Secure Act, and that's going to be hosted by Matt and Dave in our office. That's going to be from
go ahead.
10 o'clock to 11:30 on a Saturday morning. That's December 2nd.
And the Secure Act revolves around changes in the retirement plans.
Exactly.
Limits on 401ks and IRAs and so forth.
Yep. Then the next workshop we've got is Social Security Claiming Strategies and Rules by Charles, and that'll be on December 13th. That's going to be a Wednesday night from 6:30 to 8. And he's also hosting one January 10th on cybersecurity, and that's also Wednesday night, January 10th from 6:30 to 7:30. So those are the next few workshops we've got. We welcome you into our learning center, and that's frankly where we get a lot of our information, right? We invite companies to come in and talk to the 16 CFPs here in our office, and lately they've been talking a little bit about the buffered ETFs, and so we wanted to share that information to our listeners.
So if you want any information on those workshops, go to our website. It's financialgroup.com. Financialgroup.com. Click on events. All the workshops are absolutely free. We hold them in our learning center. Can accommodate 30 people comfortably, and we hope to see you there.
Thank you so much, Joe and Gary. Another great episode of On the Money. That is On the Money. You have just listened to where we're planning tomorrow.
Today.
With the Certified Financial Group.